Every night I conduct a top-down overnight analysis, mapping out key levels from the weekly, the daily, all the way down to the 15-minute or 5-minute chart to build a narrative on how I expect price to behave overnight or going into the AM session. And more often than not, price delivers with a high degree of precision in alignment with what I expected. Let's dive right in with Monday, June 29th, overnight analysis. As you can see, I posted this just a little bit after midnight, 12:20 AM, prior to the London session beginning, and I mainly trade the New York AM session. So this is hours ahead of the session that I'm actually trading. So here on the weekly chart, this is where I usually start, especially going into Monday, the new week. I will look for key pools of liquidity that are in close proximity to price, and I'll annotate PD arrays and inefficiencies, gaps that I would like to see price gravitate towards. So here I write, we can see the candles sharing ranges and consolidating. We can see that here. All this range here is being overlapped and shared by candles. And as of right now, I'm neutral on the weekly bias. So I don't have a clear direction seeing that price is in a consolidation on how this weekly candle will close and gravitate towards predominantly. However, this volume imbalance here from this candlestick's closing price to this candlestick's opening price, that gap right there sticks out to me. So I'm annotating that weekly volume imbalance, and I would like to see how price reacts to the annotated volume imbalance should it reach here. And what I mean by that is if price gets into this volume imbalance and stays below the midpoint here, the consequent encroachment on a closing basis on a daily chart or on hourly charts, then that would indicate weakness, since that is showing premium sensitivity. It's unable to get into the premium, the upper half of that inefficiency. So that is something I'm simply observing and looking for if price reaches up into here. Next, we have this previous week's low in close proximity, and I anticipate a run taking place potentially on Monday here, and with it being NFP week, I'll be looking to engage in Monday's AM session. Usually I avoid Mondays, but as ICT teaches, on NFP weeks, Mondays can have large ranges and can offer high probability setups. So if price continues to reach for higher prices overnight, that could be potentially setting up a run lower. Next, here we're looking at the daily chart. So this simply offers us more data, more candlesticks from what we saw previously in the weekly chart. We can see the weekly volume imbalance being transposed, which is also in alignment with the daily volume imbalance as well. So this is likely a new week opening gap. And here I'm looking for any inefficiencies, any gaps, wicks, PD arrays that stick out to me. So right away we can see this rally higher right from the new day opening gap being formed at 1800 on Sunday. Price is immediately showing strength. And when you see something like this, from a retail perspective, there are lots of orders being placed chasing this move higher, thinking, okay, we're really bullish, price is ripping higher, I'm gonna miss the move, I must catch it. That is the retail mindset, seeing this strength right away. So from a smart money perspective, we want to anticipate this being a trap for buyers. They're pushing price into a premium, taking out any buy side liquidity, and then potentially setting up a run lower following the buy trap. So with that in mind, I'm looking here and thinking, where could price potentially show a sign of reversal? Where do I want to look for premium sensitivity where price may want to conclude the buy trap and then begin a sell-off potentially? So what immediately sticks out is we are in close proximity to this premium wick on the previous day's daily candle. So if price can reach up into this wicks range, I would like to observe if it can stay below the consequent encroachment or the midpoint of the wick. And as ICT teaches, wicks can be treated as gaps. And I don't have it annotated in the chart, but I was also looking at this buy side imbalance, sell side inefficiency, and we can see how high of this candlestick, making the low of the fair value gap, is in close proximity to the consequent encroachment here. So that supports the narrative that we're building here, that we may want to see premium sensitivity at this level. Additionally, we have that the previous week's low being in close proximity. So if it can get up here, sweep some lower time frame buy side liquidity, absorb those buy stops of everyone going short from the previous week, and after trapping all of these breakout buyers, we may see a potential sell-off forming here. It doesn't have to form, but that's just something that we're observing. From here, I went on to the hourly chart, and the first thing that stuck out to me on this chart is this clean pool of buy-side liquidity. You can see how smooth these levels are. We have this high, and then we have this swing high, which is slightly lower than this buy side, than this one, and then we have a third one here as well. So very smooth, clean, equal highs here. So this is a low-hanging pool of buy-side liquidity that price may reach for, and I would like to see if it can get above here and show any sensitivity near the daily wick consequent encroachment. which is right here. That's the same level that we saw in the daily chart being transposed on the hourly. Up here is that weekly volume imbalance. So you can see how we're going from the weekly to the daily, now to the 1 hour. We're getting more and more data as we move on to lower time frames and refining our narrative. You can see here, this is where the daily candle started at 1800 on Sunday, and it immediately rallied higher, forming this new week opening gap. We have the new week opening gap high, which is the previous candle's close on Friday on the electronic trading hours, followed by the new week open on Sunday at 1800. This is relatively small to what we've been seeing, but regardless, that is a very important key level, and we'll refer back to this later. So we can see how price immediately rallied higher. So as you can see, this is a very low-hanging, obvious pool of buy-side liquidity that price may gravitate towards. And if it does, again, we're observing if there is any sensitivity offered at the consequent encroachment of the daily wick. And so far, as you can see, everything is very logical. It's based on specific key levels. There's no ambiguity. We're starting at the higher time frame, the weekly chart or the daily chart, and scaling lower each time and refining and building our narrative as we go. All right, moving on to the 15-minute chart. This is that buy side that was previously annotated on the hourly. This is the low-hanging pool of buy side liquidity that price may reach for. We have that the daily wicks consequent encroachment, the midpoint, transposed onto the 15-minute, and above it rests this pool of buy side here, just below that weekly volume imbalance, which is shaded up here in orange. So if price displaces past the daily wick consequent encroachment, so if it doesn't offer premium sensitivity, if it reaches for the buy side and gets into the consequent encroachment of that daily wick and it displaces past it without any trouble, then we can anticipate a run for the buy side annotated here, which is 29,947 3/4. And if it were to reach up into this buy side, we have the weekly volume imbalance. At this weekly volume imbalance, after sweeping buy side, we want to observe if it offers any premium sensitivity at this level. So if the bodies are staying in the lower half here, this is the midpoint of it, this is the upper half, it's cut off because we're simply looking at the lower half of it at the moment. If the bodies can stay in the lower half or the lower quarter or even just the low, and they do not spend much time here, that indicates weakness and is a sign for potential reversal taking place. So you can see the logic here. It's based on conditional statements. So if it reaches for the buy side, then we want to see it stay below the consequent encroachment of the daily wick. If it doesn't do that, and is able to displace past it, then we can expect it to run out the buy side. And if it is able to sweep the buy side, then we want to observe and look for premium sensitivity at the weekly volume imbalance and see if the bodies can stay in its lower half. If that is the case, then a run lower may be in the cards. So everything is based on sound logic and conditional statements, and we're continuously refining our narrative. We started from the weekly chart. All we had was the weekly volume imbalance and then the previous week's low, two things that we annotated. And then we moved on to the daily chart and we annotated one more level, which was the daily wick. Then we moved on to the hourly chart. We identified the clean equal highs that formed on the hourly. And we're continuously refining our narrative, building upon previous key levels that we annotated on the higher time frame. And we're essentially building a storyline that is based on specific key levels and sound logic without any ambiguity. And we're creating conditional statements to help build clarity around the narrative. Now with this in mind, let's take a look at how price behaved. Here is the live 15-minute chart. You can see this green dot indicating the markets are open. This is live price action with live data. And we can see that larger pool of buy side that we had annotated on the 15-minute resting below the weekly volume imbalance, which price is actually digging into here in the PM session. It's currently 2:20 p.m. Eastern time. And then we have that lower pool of buy side liquidity, or the minor pool of buy side of the clean equal highs that we annotated. So we had said if price is able to reach for the buy side here, it did going into pre-session, then we would want to see premium sensitivity at the daily wick consequent encroachment, this level here. Again, this is the same level that we annotated on that daily chart, that premium wick from the previous day's daily candle. If we look at the 1-minute chart, we can see that same pool of buy side. Here's that daily wick consequent encroachment, and look at where the bodies are closing. So we've swept the buy side, the minor buy side that we annotated, and then we were anticipating seeing premium sensitivity at the daily wick consequent encroachment, 29,821, and the bodies are closing beneath that level on the 1-minute chart, on a level identified hours before the session even began. This is premium sensitivity. The bodies are unwilling to get above this key level on a 1 minute chart. So our conditional statement holds true. And now we can potentially look for a setup. Also, look at the time. We have the 9:30 open, buy side swept, all the pre-session equal highs that were formed on the 1 minute. Going into the 9:50 macro here, bodies are showing premium sensitivity. And then we have this fold lower, reaching all the way to the new week opening gap high. And look at that level of precision. Wicking just below the low, bodies are closing above the new week opening gap high here, showing what discount sensitivity in this case. And then we have the rally higher. And we've swept that larger pool of buy side that we annotated on the 15-minute chart in the overnight analysis, being swept here. And now we see the consolidation going into the PM session in the lower half of that weekly volume imbalance. There's our narrative. You can see that level of precision, price aligning with time, the 950 macro, gravitating lower towards the previous week's low, which is here. Now, it need not reach for this low, but look at this range. I mean, it captured all of the overnight sell side that was created after the new day opening gap, more than 500 handles. So as you can see, everything was outlined hours ahead of time, all based on a logical framework, starting at the higher time frames, identifying PD arrays, doing a top-down analysis, and continuously refining your narrative and building support around the idea that you're expecting. Again, you're building conditional statements and sound logic around the idea. So if at any point something that you're expecting is violated, that's good, because you can now avoid engagement and avoid being wrong because what you expected isn't holding true. So you can either step away and wait for more intel and then adjust to the new narrative, or you can simply tape read and just choose not to engage. It's up to you. There is no randomness, there is no ambiguity. On each time frame as I conduct my analysis, I'm asking one question: where is price most likely reaching for? And where would price need to behave with sensitivity for that idea to remain valid? Again, your goal is not to be correct every time. You're simply creating a narrative and outline which you expect price to follow. So in either condition, whether price follows the roadmap or it doesn't, you're given the opportunity to participate. If it's holding true, you can look for setups, and you're being protected if it doesn't hold true, because you can simply stay out and observe from the sidelines. This is the process I use every night before trading, starting from the highest time frame, going all the way down to the 15-minute or the 5-minute, and you can see it act with precision and support my narrative that I built for today, even on the 1-minute chart. I highly encourage each and every one of you to apply this idea in your own trading. Check out my X page linked in the description box below. I post my overnight analysis before every trading day. If this video gave you value, make sure to like the video and subscribe to the channel. Thank you guys for watching, and I'll see you next time.